It's Accountech Bytes, your leisure to laptop lowdown of the week's news in accounting technology with me, Tom Herbert. Yes, I'm back in Bristol after my adventures in San Francisco and ready to round up the news. As always, if you'd be kind enough to like, subscribe, or follow this channel, I'd be immensely grateful. Let's get to it, shall we? We start with news from American accounting platform Digits, who are introducing what they're calling outcome-based pricing for accounting firms. Before I explain outcome-based pricing, let's take a look at what Digits does. So it ingests transactions from anywhere, reconciles them, reviews them, and aggregates them for reporting, automatically, no prompting required. So what do they mean by outcome-based pricing? Well, according to this post, firms only pay for clients where Digits eliminates the work. So if 95% or more of a client's transactions are zero touch, so booked, reconciled and reviewed without the team ever touching them before period close, you pay for Digits. If your team has to do more than 5% of the work for a given client, Digits is free for that client. I presume the amount you're paying is based on its existing pricing page, but the blog doesn't make that entirely clear. Pricing guru Ron Baker argues that this shift towards outcome-based pricing is inevitable. He says the moment you price the outcome, you stop selling what you do and start pricing who the customer becomes. So people value results, not the work it took to get there. It's definitely a fascinating experiment and certainly a direction of travel that tech insiders have been espousing for a while. How it would work outside this particular sphere, I'm not sure. And while Digits says that it monitors whether its users amend or correct their clients' transactions, will it be able to see if its users are going in and tinkering with correct transactions just to get out of paying? Maybe I'm overthinking this. Now, I spoke to Ravical founder and Silverfin co-founder Joris van der Goot back in December for the podcast, where he told me that accountants must evolve into AI orchestrators, which fits nicely into what his platform Ravical does, organizational AI for full-service firms. Well, according to IT Brief, Ravical has now launched a workspace platform for accounting and professional service firms designed to support value-based pricing rather than billing by time. Joris says here that firms that continue to charge by the hour by reducing the time needed to complete those tasks could see a fall in revenue, and they're being forced now to rethink that equation. As he says here, the economics of the billable hour are breaking down in real time. When a VAT return that used to take 3 hours now takes 20 minutes, firms face a choice: either absorb the margin loss or build a model that prices what the work is actually worth to the client. Anyway, Reuters reports that Claude parent company Anthropic has continued to push into finance with the release of 10 new AI agents. These are predominantly designed for financial services firms, with the agents including a valuation reviewer, a general ledger reconciler, a month-end closer, a statement auditor, and a know your customer screener. The Register's Thomas Claiborne adds a bit of much needed perspective to this. Fantastic opening line about spicing up financial operations. And as it says here, you may be thinking finance tends to be fairly unforgiving when it comes to sciencey stuff like numbers, pointing out that the benchmark for Anthropic's latest model scored an industry-leading 64.37% on the finance agent benchmark. Not ideal in the world of finance, but apparently this is no problem because Anthropic expects that users will stay firmly in the loop. It's true to say that with accounting comes accountability. Sticking with Anthropic, and a Claude-powered AI agent took just 9 seconds to wipe the entire database and backups for a car rental firm that was using it. So Cursor, an AI agent powered by Anthropic's previous Claude Opus 4.6 model, deleted data and left the car rental company's customers stranded in some cases. The company's founder states that the agent didn't just fail safely, it explained in writing exactly which safety rules it ignored. Food for thought there. Really interesting piece on Accounting Web by Daniel Lawrence, the founder of Bots for That, all about AI washing, so why most AI in accounting software isn't what you think. He urges people exploring AI to start with the goal, what they want to achieve, rather than a fancy tool they've seen. Goes into the rebadging of existing tools into AI as part of a marketing spin, and then outlines the maturity spectrum of technology. So starting with old systems like rule-based automation, followed by pattern recognition, predictive analytics, moving into natural language interaction, autonomous decision making, and finally agentic AI, where the system can plan across multiple steps, use external tools and systems by itself, handle situations it hasn't encountered before, and pursue a defined goal with genuine self-direction. While this sort of thing is coming to accounting, it's not yet widely present in the market, whatever the marketing materials say. Now, I mentioned this in last week's video, but I hadn't published the article yet. So just a quick one to highlight my first article from the Sage Future Conference in San Francisco, where Sage used its flagship event to move its AI pitch beyond chatbots and into agent workflow and implementation tools, but with its focus firmly on trust, accuracy, and transparency. And one piece of news that might have slipped by, Sage acquired a company called Doyen AI, which applies technology to the implementation process, so helping companies migrate from one piece of software to another more smoothly. I was quite impressed because I've heard AI applied to pretty much the entire accounting profession, but implementation, this was a first for me, so well done. Now it's only 2 weeks until the entries for the Accounting Excellence Awards 2026 slam shut. So if you work in practice or industry and you're looking for a bit of recognition, then why not check out accountingexcellence.co.uk for more details and categories. A quick one from MTD Corner, and our very own Molly McFarlane wrote up a piece based on our MTD Accountability Club webinar that she's dramatically called the MTD Calm Before the August Storm. Anyway, boss man Richard Hattersley was joined by Chris Downing from Sage and Samantha Mitchum from SJCM Accountancy, and of course MTD Director Craig Ogilvie. Practitioner Samantha Mitchum reflected on the past month of MTD since it's gone live. She said it's gone pretty well so far, with a few hiccups. Some clients have taken unexpected action, including putting themselves onto software without letting us know. I think it's a really important point, and I think it's something that's going to happen more and more. The algorithms are certainly bombarding me with adverts for MTD software. It opens an entirely new door for software marketing. Mitchum goes on to say some clients still don't want to handle MTD themselves, but also don't want to engage in another paid service with us. That's our main friction point. We're the bad guys in the client's eyes. And again, with the quarterly reporting model, this was always going to happen because the MTD program fundamentally changes the relationship between accountants and their clients. For Mitchum, activities that paid off included client segmentation and preparation with sign-ups and getting clients to agree on how they want to proceed. And if you're interested in how making tax digital affects your letters of engagement with clients, boy, have we got a webinar for you. So if you're getting this before 11 o'clock on Thursday, May the 7th, then you can tune in live. And as myself, Chris Downing from Sage and Gavin Spencer from Beach Accountants, why accounting firm letters of engagement are more important than ever. But you can also register to view on demand. A link to this and everything else in the video can be found in the description. Let's get on some new stuff now, and practice management platform Sodium has moved from beta to general availability today. I got a bit carried away with the salt-based puns, apologies. But the system comes with an approach built around a single client record with plans to expand into CIS, company secretarial, making tax digital, and eventually a single ledger. Exciting times. A host of updates here from pre-accounting platform Dext. So in its Making Tax Digital product Dext Solo, you can now give clients the ability to submit their own quarterly updates to HMRC, giving firms the flexibility to support every service model. There's a new connection management page in practice settings that makes it easier to see the connection status of your data health and insights clients in one place and bring back bulk connections for zero clients. You can now view a history page for each repeating workflow, and you can now choose whether an electronic vehicle mileage claim used private or public charging when creating a claim. And another developer that's been busy is FreeAgent, that's just announced a new integration with onboarding and proposals tool Onboard Me. So you onboard a client once, and that will help you stay synced with FreeAgent, creating or updating client records so both systems reflect the same information. When a proposal's ready, you can push the planned work into FreeAgent as project and raise invoices directly from the proposal's billing, whether the client's new to FreeAgent or already exists there. I must confess, Onboard Me are a new one for yours truly, but always good to hear new names, isn't it? Tiny bit of people news, and Neil Parsons, formerly of Waters Kluwer, has joined TaxCalc as its Chief Revenue Officer. Congratulations, Neil. And finally, top meme action here. Have they been looking at my inbox? Thank you to Daniel Koev for that. And that's all for today. Thank you so much for watching. As always, if you can remember to like, subscribe, or follow, that would be great. I'll be back next week with another video. Bye for now.